Hi there, Jarrad Brown here, Australian expat financial planner based in Singapore. Thank you for tuning into the video. In this video, I'd like to share with you 5 quick tips for banking in Singapore, particularly for new Australian expats, but even if you've been here for a while, you may pick up a few tidbits in this video. So let's dive straight in and get into the 5 tips. First and foremost is when you are choosing your everyday bank, so where your salary is going to get paid into, where you're going to hold your savings, consider ATM locations, which I know sounds like an odd thing to say, particularly in Australia where typically with most banks we can use that ATM card in most ATMs and even those private ATMs where we just get gouged a high fee. However, there are some banks in Singapore, particularly DBS, POSB, where we can only actually use the bank cards at their own ATMs. Now, this doesn't mean that you should avoid DBS or POSB. I use them personally, have been quite a fan, tends to be quite easy to utilize. They have some great accounts and features. But if you are going to bank with either, just consider where the locations are and make sure that it's not a huge hindrance on what your plans are and your everyday banking. So that's the first one to look into. Number 2 is do not use your bank for foreign exchange transfers. Now, even with the international banks, many badge or market themselves as being low cost, no fee, low fee, but there is usually, in fact, in most cases, a margin attached or a spread attached to the actual foreign exchange rate. So that means if the exchange rate is 1-to-1, the bank might charge you a 10 to 15 basis point or 0.1 to 0.15% margin, which would be very low, on top of the exchange rate, which is where they're making their money. Now, that would usually be the case for one of the Forex brokers. The banks will often be much higher than that. They may charge you anywhere from 0.3 all the way up to 2 to 3%. So be very careful using your bank for foreign exchange transfers, and do not fall into the trap of believing that it is a free transfer. The third tip for you when it comes to your banking in Singapore is to set up multiple accounts. Set up one for your everyday banking, set up one that might be a higher interest savings account. Typically those higher interest accounts are going to require regular deposits and in some cases may also cap the number of transactions or the number of withdrawals. So usually keep that one parked off to the side. That can also act as your emergency fund, which is usually a pretty reasonable place to keep it. The third account or perhaps more accounts that you might want to set up, you may then want to look at multi-currency accounts where you can switch different currencies but keep your money in Singapore. And you may also want to set up bank accounts for different goals. You might have a holiday fund, a slush fund, a fund for the kids, whatever it may be. That just allows you to park that money off. It's not there accessible with your ATM card all the time, and it just means that it's going to be somewhat ring-fenced from your everyday spending. So that's number 3. Number 4 is do not get sucked into the insurance and investment products on offer by the banks. They're not all bad, but as the Royal Commission showed us in Australia, they're not always that great either. So tread with caution. There are a number of banks in Singapore at the moment offering higher interest on your savings if you purchase their investment and or insurance products. Now, often they're laden with fees and that's why they can afford to pay you that bonus interest on your savings. So read the T's and C's, do your homework, and of course, seek professional advice on this one. And my 5th and final tip for you when it comes to your everyday banking in Singapore is just to tread with a bit of caution when it comes to credit cards. Credit cards in Singapore is a little bit like Australia was 20 years ago, where as soon as you turn 18 or as soon as you can fog up a mirror, here's a credit card with a huge limit and all of these wonderful features. Often the limits are much higher than we need, which can impact our borrowing capacity back in Australia, but there isn't the same degree of assessment that occurs when we take out a credit card back in Australia. So just be very careful with these things. Don't fall into the trap of having these credit cards that allow your spending to get out of control. and also make sure that you're not paying huge fees on your credit cards that outweigh the benefits that you're actually getting. So there are my 5 tips when it comes to banking in Singapore. I hope that's helpful. Thank you very much for tuning in, and see you next time.